Welcome back to the Tuesday Target Audio Overview. Today we are unpacking Week 8, titled Wall Street's Two-Track Panic, written by Juri von Randow. My name is Constantine.
And I am Penelope. It is a fantastic issue, Constantine. Juri points out a massive collective hallucination currently gripping Wall Street. Financial pundits are actively stacking their panics right now. First, they are aggressively urging the herd to dump the greenback and blindly pile into international equities. They predict the imminent collapse of the US dollar.
Absolutely. Juri highlights how those same pundits casually overlook the structurally pathetic profit margins plaguing most of those overseas markets. He explains the dollar's recent dip simply represents a routine return to its historical baseline. Foreign central banks are just managing their everyday currency pegs.
At the exact same time, the bond market is flashing a completely separate anxiety. Yields are plunging straight into the teeth of red-hot economic data. Fixed income whales are actively pricing in the endgame of the artificial intelligence boom. They anticipate massive structural disinflation.
They view AI technology as a relentless wrecking ball. They see it systematically hollowing out white-collar labor and permanently crushing corporate pricing power. So, while the crowd obsesses over software valuations and fiat doomsday scenarios, Juri draws our attention to massive capital shifts happening quietly in the physical world.
Yes, he asks us to consider recent geopolitical chess moves. Aggressive new U.S. fees aimed at crippling Chinese-built vessels accidentally triggered a massive global supply chain scramble. The ultimate beneficiaries reside in South Korea.
Their shipyards are suddenly absorbing a tidal wave of redirected global order flows. They are securing a highly profitable bottleneck on the next decade of maritime transport. We are talking about booked-out slipways, heavy steel, and soaring margins. It is pure, unadulterated capital accumulation, completely detached from algorithmic panic or congressional drama.
Moving over to the energy sector, the global narrative completely misses a massive technological leap happening right now in renewables. Next-generation tandem solar cells layer perovskite over traditional silicon. They are rapidly advancing toward commercialization.
This innovation boosts energy conversion efficiency up to an impressive 35%. Generating significantly more power from the exact same physical footprint changes the entire economic equation.
Juri also touches on precious metals. The recent retail mania surrounding gold and silver has completely stalled out. Leveraged speculators hoping for endless parabolic breakouts are currently nursing severe losses.
Institutional players recognize the necessity of a prolonged consolidation phase. Sophisticated traders are actively collecting option premium. Selling volatility generates consistent returns, while these heavily hyped commodities quietly burn off their excess speculative froth in boring sideways ranges.
We also have a major liquidity test approaching. Massive distributions of government tax refunds traditionally provide a substantial seasonal tailwind for risk assets. Retail investors historically funnel this excess capital directly into speculative equities and cryptocurrencies.
The current environment presents a unique test of consumer psychology. Following severe portfolio drawdowns across popular technology sectors, battered retail participants might simply hoard this fresh cash. The coming weeks will definitively measure their remaining resilience.
Looking at the week ahead, investors face a densely packed macroeconomic calendar. A fresh PCE inflation report and updated fourth-quarter GDP figures will immediately test the resilient economic narrative. Furthermore, regional business sentiment surveys, housing starts, and Walmart's earnings offer an unfiltered diagnostic on the absolute health of the American consumer.
Simultaneously, high-stakes geopolitical negotiations in Geneva threaten to inject sudden volatility across global energy markets. Navigating this extreme dispersion demands absolute precision. Juri recommends steering clear of legacy software dips entirely. He suggests rotating into equal-weight indices to capture broader market resilience and evade mega-cap concentration risks.
For the options traders listening, the Tuesday Target section highlights Adobe. Juri and the team are actively experimenting with new structures, combining multiple strategies to squeeze value from the market.
With this specific setup, make sure you select the correct number of contracts. You must exit the trade before the earnings release. Reach out directly to the team to understand these more complex structures better.
You can find all the official trade entries, the reasoning behind them, and details on booking a one-on-one session through the Elite Trader Plan right there in the Substack. Read the full letter to see exactly how Juri builds capital-efficient, risk-managed strategies from the option chain up.
Thanks for listening, and have a great trading week.